Hey everyone, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, July 17th, 2019. And again, we find ourselves in the final trading hour of the day. As many of you know, the last hour of the day, and more specifically, the prices that are as close to the close as possible, in my opinion, are the most valid prices of the day. And therefore, those are the prices that I feel that making my buying and selling decisions from will be the most valid. So there's a lot of advantages to trading at the end of the day. One, like I said, the prices, the market makers, large institutional funds, they take over in the last hour of trading. And in my opinion, they move the market to the valid price. Another reason why end of day trading is a good idea is because, it frees you up during the earlier part of the market. You don't have to sit in front of your computer screen all day. And of course, the volume is the highest right near the close, and therefore, you're going to get the best bid-ask spread, so you don't have as much slippage on your trade. So anyway, let me just make sure everybody can hear me okay. Hey, Andy, good to see you, man. Good to have you as always. JT is here also. Hi, JT. How you doing? Good to see you. Can you guys hear me okay? Johnny is here. Hey, Johnny, good to see you. Thanks for coming by. And Mount Doji is here, getting better at his trading every day. So, all right. Well, it's kind of an interesting day today. We're having a nice day. The Dow is currently down 71 points. The NASDAQ is down 14, and the S&P is down 12 points. So it's been kind of a negative day all around, but I'm happy to announce that we at the Gossett Trading and Mentoring Department having a really nice green day. So, all right. So the plan for today, we got a lot to get through. The plan for today, first of all, we're going to run the U.S. legal disclaimer, get that out of the way. Second, we're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward. Then we're going to do a few minutes on trader psychology. And then after that, we're going to go through all the stocks in my watch list. We're going to go through one by one. We're going to take a look at the technicals. We're going to look for support and resistance levels. We're going to figure in moving averages, RSI, MACD, ATR channels. And then if we find something that, checks all the boxes, fits our criteria for a trade, I'll be entering that as close as I can to the close of the market. And then while we're going through those stocks, we'll also take a look at some prior real life examples of our trades, winners and losers both. So I think it's always important to take a look at real trades in the past, not just, theoretical things in the future. And then after the market closes, if any of you have any questions about what I discussed today, please let me know. I'll do my best to explain. Or if you'd like me to take a look at any of your positions, I'm happy to do that as well. I've been tracking a few positions that you guys have told me. So it's kind of fun to know what your guys' positions are too and see how you're handling them, not just mine. So, all right, so that's the plan. Shalin Dewan, hey, how you doing? He said, hey, Greg, what a day on LWAY. I didn't manage to get in, but yeah, I liked that trade yesterday, Shalon. I didn't think it had moved too far. I really had not, didn't think it moved too far. And, when I looked at the trade, it was up much higher earlier, but the way I trade, I would have, certainly hit a couple profit targets. But I really did like that. I actually did a snippet of that. So in my teaching lessons, I can show people literally what a perfect V2 looks like. And that was one. So thanks for sharing that with me. So, all right, let's get this legal disclaimer out of the way, and I'll be back about 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. So I've told you guys before, I just got this new puppy that I'm babysitting for 2 months before she's off to Hawaii. Her name is Kui. And I kind of designated her my assistant trader along with my German Shepherd Kitty. Look at this. She is not helping at all. Just lounging around over here. But I'll tell you, it's fun to have a new puppy, man. It just throws your life upside down. She is so full of herself, but so fun, so smart, so clever, but it's really fun to have her. So maybe I can get her helping me with the trades a little bit more, but today she's just lounging. All right, well, let's get to our trades. All right, well, we had a monster on silver today, unbelievable monster. We did buy silver back here on July 10th when we had the 5 EMA cross above the 20 EMA. That's a good back-tested, profitable approach to trading silver, where when the 5 EMA crosses over the 28, you enter, and then you do not exit until the 5 crosses back below the 20 EMA. I, of course, put my own little spin on it. I do follow this. This is a mechanical trade, but I do phase out as the market gives me profits, and that's just part of my trading philosophy, to always take a little bit off when the market gives you something. And, you know, not just a penny, right? But it has to be a certain amount, but it has to go up at least 0.45 ATRs for me to take a profit target. But today, no, wait a minute. Yeah, 1, 2, 3, 4, 5 profit targets I hit today. Here's the 6th one up here. I think it's a record. I don't think I've ever hit 5 profit targets before. But this has been a monster trade. You know, it triggered here, immediately went against us. I was like, man, this isn't too hot tamale on this trade, not a good sign. But it reversed back up, and this has been a monster. I mean, to date, in 1, 2, 3, 4, 5 trading days, currently this is up about 9%. So this is a monster trade. You know, I did phase out 3 positions here, and it went higher, got another 2, but that's, you know, that's just what happens. I am very happy when something goes my way, even if I didn't get all of it because I phased. So going forward, I've only got about 15% left of this trade. So, you know, I'm just going to trade it mechanically, just like a robot. And so if it keeps going up in another day or two, I'll phase out completely out of my position, and that will be that. I won't have any left. I'll be out of the trade. Or it might come all the way back down here. I mean, if it does, I will just hold it until the 5 crosses below, but I'm not sweating it at all because I only have 15% of the trade left. And I'm sure even if we do come back down, we'll have another day or two counter rally that will get me out. But what an amazing trade. I know Steve Burns had this trade. So yeah, this has been unbelievable. But again, the 5 crossing over the 20, keeping in here until the 5 crosses below. Now, this still doesn't always happen, right? But it just goes to show you, if I'd have been wrong, I'd have been wrong. Like if the next day had gone down after this first down day, I would have been out for a small loss, right? But you never know when you're going to catch on to a big win, and you've got to get those big wins to pay for all the little small losses you're going to have. So anyway, great trade. Dr. Jorgensen says, better a puppy than a lady. Yeah. Frederick, hey buddy, how you doing? Steve Burns, hey my friend, good to see you, Steve. It's always an honor to have you here. I'm always excited to have you here. I know everyone else is too. Loving the AGQ trade. I love the 520 EMA crossover, broke the 70. I know you're in it, and I know you're going to be watching that 70 RSI at the end of the day. Who knows? I mean, this is a monster trade. Could keep going, right? Could keep going. So congratulations, Steve, on that trade. I'm glad we're both in it. Okay, so that is AGQ. Pig day, 5.5% today. All right, let's go back over to IWM. So IWM I also took on a moving average crossover where I have the, but instead of the 520, I'm using the 1050 because this is a good back-tested approach to trading the IWM, one of the best crossover, moving average crossover back-tested approaches on IWM is the 1050. So we bought it back here on the 28th of June. You can see it immediately went our way. I got out of about 25% of the trade right up here, right off the bat, which only left me with 75%. It's moved down, I mean, it's basically been moving sideways, but did manage to phase out a little here, phase out a little here. So I'm out of about 45% of this trade. You can see we are underwater on the trade because I bought it back here at 155.88 and now it's 154.33. But all in all, pretty close to break even for me because I did get out of portions up here in the profitable level. You know, we're smack dab in the middle of the value zone, which I do like. When I took this trade here because it was 2 strong days up, I elected to go ahead and just take 50%, a half position, a 5% position instead of a 10% position. But if we get some kind of V1, V2 while we're under the crossover, so see, we're still under the crossover, which is positive. So if I take a crossover or I miss a crossover and then I see a entry point while we're still under the crossover, that just adds another little brownie point to me potentially taking a trade. So, you know, this is setting up possibly tomorrow for a really nice V2, right? We go up, we move sideways, we spike down. If tomorrow we can close back above yesterday's close, I probably would re-enter that, and I would be re-entering that at a better RSI level as well, because over here the RSI level was a little bit extended, but now that it's had time to cool off, move back down, you know, if we get a V1, V2 tomorrow, then I'll enter my second half to have a full position. But I still have to have a trigger, right? So anyway, that's IWM down a little bit today. All right, SPY. All right, so I do buy the SPY every day at the end of the market, and I sell it first thing in the morning. You can see yesterday we bought it at 29.71. 29.71. Sold it first thing this morning at 299.77. So it ended up making 6 cents on the trade, which is not bad, right? But the main thing is you see how it got sold at the open, and it's gone down ever since then. And look what's happened here. We bought here, sold here, went down. Bought there, next day lost like 11 cents, went down. Bought here, sold here at the open for a slight profit, down. So I mean, we have missed out on this entire, literally this entire move down because of selling at the open. So anyway, I will be buying this again today. Just real quickly, in case we have some new viewers, you know, Greg, why would you buy this every day and sell it every day? Is it, you know, doesn't seem very technical, but this is from Lizanne Saunders at Bespoke Invest on Twitter. It's a good Twitter channel, so you know you might want to go over and take a look. But if you would have, this is from 1993, if you would have bought the SPY each day at the open in the morning and you sold it each day at the close from 1993, you would have actually returned a negative 13.9%. But if you did the opposite and you bought the SPY at the close every day and sold it the next morning at the open, you would have actually returned 634.2%, meaning that all the performance, get your head around this, all the performance from 1993 until now has come in the after hours market, and people bidding it up in after hours, bidding it up the next morning in pre-market, and then selling it into the open. I mean, look at the graph. The blue bar is the buy in the afternoon, sell in the morning. 634.2%. The orange bar is the buy in the morning, sell in the afternoon. So, I mean, this very clearly shows you that the moves, the price moves in the S&P do not come during the day. That's why, it's difficult to be a day trader, because prices, you can see clearly, they don't move that much in the day. They move clearly in the after hours. So that's the reason why I do buy the SPY every day, because it has a good long-term result. It has a good edge. It does have drawdowns, everybody, so you can't just think, hey, this thing works great, I'm just going to like put my whole account in there and do this. I wouldn't do that if I were you. I would take a 5% position size, a 10% position size, and play the long game with this. Let the edge work out for you in the long run. I mean, you might start doing this here and it might go down literally for a year, right? So if it does that, you want to have a small position size so it doesn't affect you too much, and so that you can play the long game with this. So I will be buying SPY again at the end of the day today, just like we do every day. Rinse and repeat, right? I mean, that's the key with profitable trading. Find yourself an edge and repeat, just like in Las Vegas with blackjack. They have an edge in blackjack. They just want to deal as many possible hands as possible to take advantage of that edge. And using the overnight SPY clearly has an edge, at least from 1993 until now. Maybe going forward it won't, but you're better off going off of something that has a proven track result. Doesn't mean it's going to happen in the future, but still better, right? So I will be buying this today at the close, and we'll see what happens tomorrow morning. Okay, Verizon. Verizon is up slightly today. I did buy Verizon back here on July 12th, and you see this green triangle here? Essentially what happens is you had a move up, the next day washed it out, went up, reversed. This is a negative V1, right? This is a bearish V1. So that's bearish, but the next day was able to take out the previous day's high. So you have a high, you go up, over, close below. That's bearish. But if you have something bearish happen and something immediately bullish happens, that's pretty strong. And the next day did go up, take out that previous high, confirm this triangle. And as you can see, it's moved. Next day it moved nicely for us. We hit a couple profit targets, I believe. I think it was one or two. I can't remember. But we definitely hit one profit target here. Did find some resistance at the first ATR channel. Moved sideways yesterday. Today was down much more early in the day, but it is up slightly. So we are up. We did buy here at 57.19. We got rid of some up here. So my trailing stop on this going forward is probably going to be, I was checking it earlier, if tomorrow we lose the 20-day moving average, we'll also lose the 50 RSI. So depending on what happens tomorrow, I'll get out if we have a close below the 10 EMA or the 20 EMA. But as it is right here, right now, it's fine. But this is still a profitable trade. And that is it. AGQ, boy, it'd be sweet to hit 6 profit targets, but we'll just have to see. So AGQ, we bought the 520 cross. That's really worked nicely. IWM, bought the 1050 cross. Did take some profits. Today it is down, so nothing to do with this until the 10 crosses below the 50. The SPY, bought at the close, sold right at the open for a very small gain. And then Verizon basically flat, up 2 cents today based upon this fake out trigger of this fake out bar. So that one's been positive. So like I said, it's been a nice profitable day. The Dow's down 60 points. So always nice to have a nice green day when the market's down. All right. Let me just check here. How we doing on time? I've been running out of time lately. Johnny says, my winner today was HSY, which I bought Friday. Sold it today. It tested the EMA 13, which I use as signal. Oh, good. All right. Well, I'll look at that in a second, maybe after, but I always like to look at your guys' positions. Dr. Jorgensen, easy money again. We should sleep a lot more. That's right. Yeah, it happens overnight. So look, I want to show you real quickly, just do a few minutes on some trader psychology, but this is from Stephen Goldstein. at Alpha Mind 101. It's a really good Twitter channel. It has some good interviews. I listened to a great interview the other day with basically a trading psychologist. But he posts really good things on there on psychology. So, do yourself a favor, go over, subscribe to that channel and read his stuff. It is good stuff. But he says, if I guess if you're focusing on being right, you're probably not focusing on making money. If you focus on making money, being right becomes less important. So he has this chart here with 4 different types of personalities. And and you have the combination and then it kind of tells you. But those who focus on finding certainty and possess a strong need to know. So if you have this type of personality, you're focusing on certainty and possessing a strong need to know, combined with those who have a strong need to be proven right, this is a disaster for trading because there is no certainty and you're really never going to need to know. But if you have the type of personality who needs to be proved right, essentially what's going to happen, you're going to stay in stocks, you're going to stay in positions when they go against you because you feel like you need to be proved right. But this combination, those who focus on finding certainty and possess a strong need to know, combined with those who have a strong need to be proved right, individuals least likely to succeed in trading and investment. Okay, so let's go to this one. Those who focus on finding certainty and possess a strong need to know, but they also do not have a strong need to be proved right. So this is a little better, right? May be strong analytically, but may struggle to monetize their analysis. And then when we combine these two, those who do not have a strong need to be proven right, which is a good thing, combined with those who fully embrace uncertainty and accept not knowing as a way of life, individuals most likely to succeed in trading and investing. Let me repeat. You do not have a strong need to be proven right, and you fully embrace uncertainty and accept not knowing, because that's what trading and investing is. You do not know. You do not know. Right? And if you don't need to feel like you need to be proven right, along with not knowing, that is the mindset that will really benefit you as far as being a trader. And then the last one, those who fully embrace and accept not knowing as a way of life, compared with those who have a strong need to be proven right, on the right path, but need to lose the need to be proven right. So don't feel like you're going to find certainty in the market. You are not. And you're not going to know. You'll never know. And get rid of your need to be proven right. It might work in other occupations and other adventures, but in trading, individuals least likely to succeed. If you do not have a strong need to be proven right and you fully embrace uncertainty and not knowing, most likely. So keep that in mind. Again, this is from Stephen Goldstein at Alpha Mind 101. It's a good channel. So that did speak to me, and I wanted to share that with you today. Okay. Steve Burns says, Stephen Goldstein nailed it. Great share, Greg. Oh, thanks, Steve. Appreciate that. Yeah. Sometimes getting your head around that, seeing it right there so you can understand. Don't feel like you have to be proven right and basically go with the flow, right? Be okay with uncertainty. You have to have those two. A lot of people get into trading, successful people, they get out of business. Those attributes help them in their business and they come to trading, and it is not a help. It is a hinder. Murat says, I think everybody should read Trading in the Zone. Not once, many times. I read once and listened 4 times. I agree. That's a great book, Murat. Really great book. Steve Burns says, the market price action is always different. The profits come from asymmetrical risk, great risk reward ratios, and capturing trends. Absolutely right. It is always different. The market is always different. You can't rely on it to do one thing just because it did one thing before. Egos are expensive things in the markets. Oh man, so expensive. All right. let's get down to business and see if we have anything for today. So I'm going to go through each chart. We're going to look for setups, and then I'm going to point out some previous trades if we had them. So Apple, having problems with this second ATR channel. Tried. So, it's always coming off its top, which is not a great sign. We're not back in the value zone yet, but if we get back into the value zone, look for a V1, V2 entry. And if you guys don't know what V1, V2 entries are, or you'd like more information, I have a video in the description of this live stream specifically about V1s, V2s. I think it's about 50 minutes, but on this channel, you'll hear me talk a lot about V1, V2 entries. They're probably one of my favorite and most effective entries. So essentially, I'd like to take V1, V2 entries, to make it simple, in the value zone. We're not in the value zone, so if we can get back in the value zone, possibly something on Apple, but not today. Silver, well, you bought that back here. This has been a monster. So we'll have to watch and see what happens. If it closes under 70 RSI, that would be a valid point to get out. But I don't know if any of you have this, but this is a monster trade. So glad we have that today. Advanced Micro Devices had this nice move up, skidded a little bit when we got up here to the third ATR channel, which happens a lot of the time. 2 days ago we closed above, now we're below, now we're below again. I mean, this doesn't mean this is going to be crashing down here. It just means that there's some profit taking up here, and for me to get interested again back in the value zone is where I'd be most interested. Amazon. Well, we spent a few days outside of the third ATR channel, but now we've come back in, which often happens. Again, this doesn't mean, it's going to go crashing. It just means that people were taking profits up here. And again, if we can get back into the value zone, another way to look at this too is see this previous high. This acted as resistance and we broke through it. Now this acts as support. I would really love to see a combination of the prices move back down into the value zone. At the same time, they have the support from this previous high, potentially. Maybe have a 50 RSI, V1, V2. That would be a sweet entry, but nothing on Amazon today. Boeing. Oh, man. So, boy, I can't remember. Oh, yes, that's right. I did buy Boeing on this break above the 200-day moving average. Next day, it closed right barely below, and I had to get out, take a small loss. I did take a half a position because we come from a lower low, and when I have a lower low, I always take a half a position. But anyway, took a small loss here. Considered getting back in here yesterday when we closed back above the 200, but I just decided not to. And I thought, well, maybe I'll wait and see if we trigger a fractal. Well, we certainly did trigger a fractal. However, now we're stuck right at the 1 ATR channel, and we've got the 100-day declining moving average above us. William, if you're out there, this is what I was talking about. If I was in this trade and it rejected the 1 ATR, that wouldn't be a red flag to get out, but it is a red flag for me to consider an entry because it's right up against the 1 ATR channel. And so I'm going to let this one go. Might keep going up, who knows, but I'm just going to let this one go because it doesn't fit my risk to reward profile. A stop, my nearest stop would be a halfway of this bar, but more likely the 200. And then we've got the third ATR channel up here. So it's a little better than 1-to-1, but just because of this downward sloping 100 and it's finding resistance at the 1 ATR channel, I'm just going to let that one go today. Alibaba did come back down into the value zone. I was looking for a valid V1, V2. There is a V2 here. Day 1, day 2, day 3. Day 1 washes out day 2 washes out day 1. Day 3 closes above day 1, but it gapped and you had a big bar. Now, just because that happens doesn't mean it can't go up, and it certainly did go up. We have another V1 here today. See, here we have the low. We wash out the low and looks like we're going to close above. but this is too high. It's above the 1 ATR channel. It's a 61 RSI. So, this could keep moving, but nothing on there for me today. Caterpillar. Well, take a look here. William, if you're listening, if I were long Caterpillar here, the fact that this day here went above this previous high and then failed, that would be a red flag for me. I'm talking about an email correspondence that we had. So that would have, if I were long, this would have been a red flag to go higher than this previous high and then reject, and so having a false breakout to the downside. That would be a red flag. So we're coming back into the value zone, which is good. The bars are too big right here. I need them to start narrowing, not getting so long, move sidewards, look for a V1, V2. Pro shares. Well, last few days we were above the third ATR channel, very strong. Today we're coming back in to the ATR channel, and we also were above the 30 RSI, above the 70 RSI and back below now. So, I'm not going to short this, but if I were in a shorting mood today, this is what I would look for. Something that tested the 70 and that was above the third ATR channel, went below 70, closed below the third ATR channel, because 90% of prices stay within these channels. So here we are an extended level. Now we're back in the channel. Could it go up? Sure could. Who knows? But most of the time prices are in here. So I'm not going to short this. I want to wait for a better entry. This was a real trade we took back here on June 6th when we closed below the 200, then back above. See, this gives me a good risk to reward ratio. If in the coming days it closed back below, I just immediately get out, right? That's what would happen, giving me a small loss. But if I'm right and it starts moving up, give it patience. And this turned out to be a huge trade. We bought here, we scaled, sideways, scaled. I got out right about here at the 70 RSI. So that was a really great trade. So, I say this every day, but be patient. Let the prices come to you. Don't get impulsive. Think, oh man, it's going to leave without me, and have all that FOMO. Just sit on the sidelines, sit on your hands, handcuff your hands, whatever it takes. But don't take a position until you have a reason to. Walt Disney. Walt Disney spent a lot of time up here over the 1 ATR channel. I'm looking for a pullback into the value. Well, here it comes, right? Now we're starting to get in the value. Ideally, I'd like to see something around the 50 RSI in the value zone with the V1 or a V2. That would be an exceptional place to buy, just like we did back here. On the 3rd of June, we're inside the -1 and the 1 ATR channel. We move down. We have this nice V2. Here's day 1. Day 2 washes out day 1. Day 3 closes above day 1. It was above 50 RSI inside the channel on the lower end of the channel. My stop would have been about right here, halfway of the washout bar. So I'm giving myself a very small stop if I'm wrong, but you can see we scaled all the way out up to here, and it was a beautiful trade. But we were patient, right? Such a big part of trading is being patient. Okay, so I did take Etsy yesterday, and this was a moving average crossover trade. When the 10 crossed over the 50, it's a good back-tested approach. I liked where we bought it because we had this move up and the pullbacks, and it was in the value zone, so I liked it. But yesterday we had a lower high. We closed lower than the low. We closed under 50 RSI, and so I just made a decision to get out of the trade. It doesn't mean it was the right decision. It was a right decision today, certainly. But because we're still under the crossover and we're still in the value zone, if I could get a V1, V2 entry here, I would reinitiate that trade, but I have to have a reason to get back in. So nothing on Etsy. So we did take a small loss on Etsy yesterday. Facebook has just been moving up, nothing to do. It couple days outside of the third ATR channel. Now we're coming back in. We're making a lower high. We're making a lower low. So, you know, again, looking for a V1, V2 entry right around in the value zone. Five Below did catch some support at the 100-day yesterday. Was preceded by this really big downward strong bar. Technically, it did form a V1 yesterday. Here's day one. Here's day two. Day one washes. I'm sorry, day two washes out day one, closes above. But I don't like to take V1s or V2s in front of these big, big bars. So nothing there for me right now. I mean, it's good that it tested the 200, it went below the channel, closed back in. But this big bar is too soon in its recent past for me to get interested in. Gold. Well, this is what I was talking about yesterday. It was interesting. Gold didn't move up yesterday and silver did. But, you know, here we have this sidewards movement, inside bar, inside bar, inside bar, and then we failed. So that's bearish, but I shouldn't say a lot, but sometimes you'll get a false break one way and immediately go the other way. I mean, this to me is quite bullish. It is a V2, right? Here's day one. Day two washes out day one. Looks like day three is closing over day one, but the entry, because it's above the 1 ATR channel, is a little high for me to take. You know, I feel like this is bullish in the future. Did take out this fractal also, but you know, my theoretical profit right here would be up to the third ATR channel, and my stop would be down here. So kind of 50-50. And again, it's over the 1 ATR channel, and so it's a little high for me to take this. But I actually do like this setup, but it just doesn't fit my parameters. But I do like that setup. Oh, let's show you. Now, we took a trade back here on gold, same as we did with silver, when the 5 EMA crossed over the 20 EMA. I know it's a little hard to see because it gets skewed with these big bars here, but same with silver. We had a 5 EMA cross the 20 EMA, happen inside the value zone, which I really like. And you can see this was a beautiful trade. I got out right about, I phased out all the way right about up into this area. So again, I like gold. I just needed to come back in to get some kind of valid setup as far as what I use. Google did reject the 100-day moving average 2 days in a row now. Was also up close to the third ATR. So nothing here today. As with a lot of other things, I'd like to see it come back in, maybe test the 200. The 200 is also in the value zone, and on top of that, get a nice V1, V2 entry. That would really be good. I did take a trade on Google on this day when we had a 1030 cross. The next day it rejected the 100-day. So William, if you're listening, that was my red flag, because I took it, rejected the 100-day, said, okay, didn't like the 200-day. So I got out for you know, a quick little 1-day profit. Next day it did close above the 200-day, and I entered here. Next day immediately went out, immediately went down, had to get out because the 200 was my stop. Next day it tried to go back above, closed slightly under, and then here triggered this fractal, but if fractal was a little high for me, it was a little too close to the third ATR channel, so I didn't take it, but it has moved up nicely from there. So any of you have Google, glad to see that's moving up. Goldman Sachs is down today. Again, you're seeing a pattern here, right? A lot of these big stocks last few days were above the third ATR channel, which is very strong, but now we're coming back down into the channel, and most prices stay between here and here, the third and the negative third ATR channel. Doesn't mean this is gonna go down, but you know, from an odds perspective, it tried to stay up here, it didn't like it, so we'll see what happens. I hate to guess on this, but you know, being that it's coming down under the third ATR channel is a bit bearish, really. So again, here's the green line. This is the value zone right in here. This is where I'd be looking to initiate another trade. This was another real life trade we took when we the previous day. We closed under the 200, back over the 200. My stop was a close under the 200 for a small loss if I was wrong. It also triggered a fractal. You can see this is a really nice 2-day trade. I exited here when we lost the 70 RSI, but giving myself a small risk if I'm wrong and having a nice reward multiple times the risk if I'm right. IBB. So IBB has found some support at the 50-day moving average. Technically had a V1 today. Here's day 1. Here's day 2. Day 2 washed out day 1, and it looks like it's going to close above day 1. Would I take this here? I would not, because for one, I want to see it close in the channel. It's still under the channel. There's resistance at this lower channel. But my plan with IBB is there's a good moving average crossover trade. It's the 530 EMA, you know, like the one we just had on silver, but instead of 520, it's 530. So this is the blue line, the 5 EMA. The gray line is the 30 EMA. If on a closing basis the 5 crosses back over the 30, that will be my entry. So nothing today, but you know, looking forward in the future, if the 5 can cross back over the 30, that will be my entry. It will be a mechanical trade. It will be a robot trade, not a discretionary trade. I generally don't take robot trades on individual stocks because they have earnings 4 times a year and I don't hold their earnings. But if you have a index like the Qs or the SPY or gold or IBB, you're not going to have earnings, so you can kind of just stay in them for the long term as long as your signals tell you to stay in. Intel had that big move up and big move down. So it's above the 1 ATR channel. Nothing really there. IWM, we have that. We talked about that. We bought that with the 1050 cross back over here, right here. Did phased out some here, phased out some here, but it is now under our entry point. But this is a mechanical trade, so I'm just going to hold this until the 10 crosses back below the 50. But I am actually, now that it's in the value zone, because I only took a half position, I am now looking for another long entry for a second half because I only took half. Well, Johnson & Johnson, you know, had that huge day down. It did test the 200, rejected the 200. It's a 30.95 right now. I mean, technically you could buy it here with the close under 30. It would give you a good risk to reward ratio, but I don't like that we don't have like a double bottom with a bullish divergence or a V1 or something, or we close back over the 30 ATR channel. So it's under the 30 ATR channel. This 30 ATR channel is going to act as resistance above here. I actually did look at this as selling a put down to 122 because on the weekly it lines up with the 3rd ATR channel on the weekly, which I like. On the monthly it lines up with the 1 ATR channel on the monthly, and then on the daily, in addition to excuse me, dang, I ate some almonds before I came on. And that 122 price would also find the support way back here in December. So I actually do have an order in right now to sell a put, but I just haven't got filled today, and I don't know if I will. I was selling it at 24 cents. Right now the ask is 23 cents. So anyway, that's kind of how I view options. But if we hear the ding, we'll know we got filled. All right, Coca-Cola. So I am looking for a short in Coca-Cola. I don't short a whole lot, but I really do like this setup because here we have a high, big bars, big strong momentum. We make another high, we're running out of momentum. Then we make a higher high, no upward momentum at all with the green MACD bars. So you know, this tells me, okay, be on the lookout for a possible short, if it's a valid short. But what we have here, we have a V2 to the downside. We have a high, we washed it out. This is the opposite of buying, this is selling. So day 1, day 2 washes out day 1. day 3 would have to close below the close of day 1, which is 52.13. Right now we're at 52.12. So if this does close under 52.13 based upon the bearish double and triple bearish MACD divergences, the situation that we're in with those, and a legitimate V1, V2, I will go short. I will go short Coca-Cola. I'll take a half position because it's a counter trend move and we're above the 200-day. But I do like this bar that thoroughly went higher and reversed, showing me that there were no more buyers up here. So as long as I get a trigger today, as long as this closes under 52.13, I will initiate a short position, half short position. My initial target will be the 50 RSI down here, giving me a good risk to reward ratio. Don't know if it will work. We never know, but that's the setup. So we'll watch this at the end of the day. Whew, okay, this can happen to you any day on any stock, everybody. So please remember this. It may not make you so bold and cocky when it comes to taking large position sizes. So remember, this can happen. So I was waiting for this to come back into the value zone. Well, it lost the value zone. It is underneath the value zone now, which kind of negates the whole setup. You know, down here, we have the third ATR channel. We have the 50-day moving average. This is where I would be looking to buy this because of confirmation of two signals. Here is a good, this was a live trade that we did where we made a higher high. We came back into the value zone. We moved sideways. See this nice V1 right here? Day 1, day 2. Day 2 washes out day 1, closes above day 1, and we rode this all the way up to here. My stop literally would have been about here. So I have a very small stop, but my reward is many times that. So that was a great trade. MasterCard, same, up above the third ATR channel, up above the 70. Now we've come down under the third ATR channel, under the 70. You know, that is bearish. Doesn't mean it's going to go down, but that is bearish the way I look at the markets. We shorted back here. Same situation. We were above 70. We closed below 70. We were above the third ATR channel. We closed below the third ATR channel. You can see that was a nice short trade. We started getting in the value zone. Now I started looking for a long position. And presto, we have this nice V2. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. Happens in the value zone. Immediately went our way. We got out of about 50% of our position here, and then it went back down. Got out of the rest, but it was still a nice 3-day trade, having a nice short trade, followed by having a nice long trade. It came back in the value zone. I was looking for another entry, but I never got one. I didn't get a valid V1, and sometimes you won't get a valid entry, and it'll just take off without you, which is what happened. Merck having a okay day today. I did close out my put yesterday, so I no longer have a position on Merck, but I did make 80% of my premium on that. Microsoft, like everything else, coming back into the value zone, so we should keep our eyes open now, but nothing there today. Netflix down today. It does have earnings after the bell. That should be interesting. Nike, big move up. Again, once you start getting overvalued, and what I mean overvalued, over outside of the value zone, you usually come back into it. It's usually mean reversion back into the value zone. So I would be looking for some kind of re-entry back here in the value zone in the future. Philip Morris, nothing today. Here's a good example of a trade that we took where we had two signals. The first signal is we had a V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. That is good. Normally I would not have taken it this high, but the reason I did take it is because it also closed above the 200-day. So, you know, it gave me a good risk to the downside, small, but you can see it immediately took off, and I got out of it this day. So it was a 3-day trade. I actually wasn't even supposed to get out. I missed it at the end. Had I not gotten out, I probably would have had to stay in yesterday, but I definitely would be getting out today because see the red triangle? This is a V1, right? This is bullish, but if you have something bullish that then next day immediately becomes bearish, that's negative. So if I were still in this, luckily that I got out higher, but if I was still in this, I would have certainly been getting out today. What do we have? 10 minutes? Dang it. All right, sorry. PayPal. Looking for something in the value zone. We did buy it in the value zone here on this nice V2. The reason I keep pointing these out is because I want to show you that when we buy in the value zone, we usually have nice trades, right? And we did. We bought here at the value zone, the V2. So I want to see it go in the value zone again. The Qs. Nothing on the Qs. Too high. We did buy back here when we had a good risk to reward ratio. Closed below the 200, over the 200. I would have had a very small stop if I was wrong. Rode this all the way up to here and phased out all the way. Snapchat. I do like that this came into the value zone. We did intraday trigger a V1, but you know, a lot of you have been sending me photos of V1s, and what I'm seeing is a lot of this straight down, then a V1. I like to see it come down, move sideways, and then have a V1. SPY, we're going to buy that at the end of the day. Square. Nothing there, just too high. We had a beautiful trade on Square. We had a low, we had a rally, we made a lower low, we had a bullish MACD divergence, we had a V2 entry, we took out, it was a false breakout to the downside, we closed back up into the channel, had this monster trade. It was a 14% trade. So, you know, I saw this trade developing weeks before. So, you know, look out in the future and say, I'd like, if this and this and this happen, then I'd like to buy it. ProShares, nothing there. Bonds, nothing there. Tesla having another up day. Twitter rejected that third ATR channel. That's why I always keep an eye out for that. Natural gas, nothing. USO, oil has lost the channel, so now it's technically undervalued the way I look at the market here, but big strong bars on big volume. I don't like this at all. UUP, nothing there. All right, here's VIX, everybody. I will be placing an order of VIX today. I'll be taking a quarter position. It did trigger a V1 yesterday. It did everything I wanted. It had a nice V1. Day one, day two washes out day one, closes above day one, closed back in the channel, but it was under 30 RSI. So I needed those three things to happen. Today, however, it is waking up, as you can see. We're back in the channel. We went from under 30 back over 30. So I will be taking a position in the VIX today. VIX is very volatile. So normally on things that are volatile, I take a half position. But because this is extra volatile and it's the VIX, I'm going to take a quarter position. So not a 10% position, not a 5% position, but a 2.5% position, because a 2.5% position really is like is really like a half 5% position or more. So I will be buying that today. Verizon is down a little bit now, but like I said, I think I'm going to use that 20-day as my initial stop, or the 10-day, because that's where I bought it. Even if it gets down to where I bought it, we still took some profits, so it still makes it a profitable trade. Energy Select, boy, oh boy, that's ugly. Nothing there. Financial sector, you know, up here, it seemed all exciting to buy up here, didn't it? News sounded good, but this is generally what happens. So back in the value zone, V1, V2. Real estate, down. Don't like this at all. Maybe the 50 moving average might be an interesting place. Utilities, it's a V2, but it's not a good V2. It's too high. Well, no, excuse me. It's not too high, but the gap. Here's day one, day two, day three. Day two washes out day one, but see how it gapped open? Don't like that gap. Healthcare, this is going to move somewhere. Doesn't mean I'm going to buy it, but we are really consolidating here, making inside bars, tightening this range. I would love to see a spike down, a reversal back up, reject the 1 ATR channel, and trigger a V1 or a V2 in the coming days. That would be good. So I'll be watching for that. And then pharmaceuticals just getting brutalized. So the potentials today for the only potentials I see today actually and I know you guys have a lot of comments and questions. I'm going to get to them, but let me just get through this today. So Coca-Cola, if Coca-Cola, only if it closes below 52.13 will I short this. And VIX, I am going to buy that today, a quarter position. So let's go back quickly, take a look at my current position, see if there's anything we need to do. Silver is, okay. Those were my Johnson & Johnson puts that just went off. All right. So silver looks fine. It's holding above the 70 RSI. Nothing to do there. IWM continuing to move down, but still the crossover is in place, so nothing there. SPY, boy, am I glad we sold that at the open, everybody. Much better to buy at a 0.5% down than this morning for the same thing. So I already have this programmed in. I'll buy my regular 10% position size of SPY. VIX is really moving up, closing above the 5 ATR channel, the 5 EMA, excuse me. It's still only a 34.91 RSI, so my profit target will be a 50. My stop will be a close under 30, so it's still a good risk to reward ratio, so I will be buying this. Verizon. If it closed under the 10-day today, I would probably consider getting it out. Just like the 20 would be good also, but just because my initial entry was there, and I don't ever like to take something that was in the profit and then have it turn into a loss. It's just not a good policy, but it is still above, so it's still fine. So okay, let me program this in to buy the VIX. And then the Coca-Cola, I'm going to have to do that manually. 52.13, I have 3 minutes. Ooh, look at VIX go, everybody. All right, well, on Coca-Cola, it's going to be tough. It's right on the button, but I'm going to go ahead, order, and enter this in.
Order filled. Order filled.
All right. Oh, that Coca-Cola is going to be close, close, close. 23.29. All right, so I did buy VIX at 23.29. Coca-Cola it's just right there, isn't it? Close. Oh, yeah, okay, so the close of yesterday was, oh no, close was 13, yeah, so 13. So unless this closes below, I cannot short it. Boy, boy, look at everything sell off.
Order cancelled.
All right.
Order filled.
So no short on Coca-Cola because it didn't trigger the V1. So I did enter VIX right here at 23.29. All right, so we're in the money, 4 cents already, so that's good. You know, the other thing I want to mention here too, and might be hard to get your head around, but you see how we had this V1, which is bullish, but then we went below the prior day's low. That painted the red bar. That is bearish.
Order cancelled.
But it painted the bearish and then went the other way, which flips it around to bullish. I know that's kind of hard to understand. I'll have to spend some more time on that. But anyway, so we are back into the VIX. We went from under 30 back over 30, went under the third ATR channel, went back over the third ATR channel. Big volume today too, everybody. Big volume. Oh man, nice screen day today. I'm very thankful for that. Mainly thanks to AGQ. So Verizon was fine. Let's see, I hope it was fine. Yeah, it was fine. All right. Okay. So listen. If you guys have any questions or comments, please put them into the chat and I'll go through them and answer any questions that you have. But before we get to the answer part, I just do want to let you know quickly that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I really like to teach. I've had some really good success with my students. I've taken some students that were perpetual losing traders and have turned them into honestly legitimate profitable traders. And you know, so if that's of interest to you, if you feel like some one-on-one time with me in the evening via Skype would help you out, which I know it would, please reach out to me. My email and my hourly rates are in the description of this live stream, and you can also reach out to me on Twitter. It generally starts with a free phone call. I just want to get to know you better. I want to understand, you know, why you got into trading, what your experience has been, what your approaches are, what your challenges are, and what your goals are. And then I'll work with you and create, you know, a specific lesson for you to help you achieve those goals. So anyway, reach out to me. If it's of interest, but I have never had a student that wasn't really happy, you know, that they took a lesson. And then secondly, if you like this channel, I really would appreciate if you would subscribe. And also, you know, if you found today's live stream helpful, if it's helping your trading, you know, please do me a favor and hit the thumbs up button. It's just right there underneath the video. That helps Google, you know, understand that people like this channel and they promote it more. And there's a lot of people out there that have a really tough time with trading, has a negative impact on their life and their financial life and their mental life. And, you know, I feel like if we could get them into this group, that we could teach them some good things and better their financial life and their normal regular life and relationships too, by stopping the hemorrhaging of money. So do me a favor, hit that thumbs up button, share it on social media, you know, also that would be appreciated. So, all right, enough of that, man. I feel like I'm losing my voice. So let me go back and take a look at some of the comments and see if anybody has any questions. Murat talked about the book Trading in the Zone. I would really recommend that. I have listened to that. It's really good. Listen, speaking of books, Steve Burns, our friend of the channel and all around superstar trader and author and mentor and awesome guy, he posted this in Twitter today. And if you don't follow Steve Burns, do yourself a favor, at @SJosephBurns on Twitter. Great stuff. But here is a new trading book from New Trader U. New Trader U is his company and his website, currently available on Amazon. The Ultimate Trading Psychology Guide by Constantino Pesto at Traders Reality. Sorry if I mispronounced that name. But any book having to do with trading psychology, I'm all in. As you guys know, I think it's the most important, and here it is on Amazon. What I really like with this description, because this description sums up really nice my belief in psychology of trading. Trading is considered to be one of the world's most difficult professions because the competition is fierce. Some of the greatest trading minds will use every skill they have to increase their odds of success. It's a zero-sum game. Someone has to lose in order for someone to win. The best way to mentally accept this fact and create a mindset to trade carefree is through acceptance and probabilities, like what we were just talking about back during the psychology section when we were looking at that post, right, about acceptance. But this looks like a really good book. I don't know. I'm going to check on Audible, see if they have Audible, but I'm not sure. If not, I'll buy this book. But anything that you can read about trading psychology, read it, guys. That's why I harp on it every day. It's not the buying and the selling. It's what happens between your ears and your mind. Okay, so I did want to mention that. Johnny says, my personal therapy for ego control is telling my wife about every loss I have. That's so great. Works for me. She probably wonders why I'm so happy about my little losses. Johnny, is great advice. I have mentioned on this channel before, if you have a problem with your ego or your trading or your stop losses, tell somebody about it, man. Tell your girlfriend or your wife or your boyfriend or your husband, whatever. Be accountable. Get an accountability buddy, right? Reference to South Park. But get yourself an accountability buddy because maybe you're not strong enough to take action. So tell somebody else so they know. Like if you told somebody you stop smoking and you come around the corner with the beer and the smoke in your hand, they're like, hey, what the hell, right? I mean, it's going to help. So tell somebody, someone in your life, explain to them what you're doing. This is if you have issues with stop losses and your ego, but get somebody else in there to help you. It will make a difference. Really good post, Johnny. Thank you for sharing that. You're going to be a better trader because you don't want to constantly tell your wife about your trading losses, right? And that will make you a better trader. Murat says, Greg, you should write about the value zone. Title like Chasing the Value Zone, like Mike Douglas. Yeah, I'm a big fan of the value zone, guys. I mean, I'll tell you, when I studied one-on-one with Dr. Elder, I'll never forget this story. He was telling me about the Egyptians and their cotton market. And they were perplexed why prices went up and why they went down, why they went up and why they went down. And they hired, I believe it was a US or European firm, to come in and try to give them some numbers or some explanation about why you had these increases and decreases in price. And I'm sure they paid a big firm a lot of money to come in and analyze the cotton markets. And at the end of the study, they basically said, okay, cotton prices either go above value or below value. And when they're above value, you should sell them. When they're below value, you should buy them. And then they always go back into value. So if you're going to buy something, try to buy it in value or under value. But when the prices are above the value, sell them. Pretty easy, right? And if you use that concept with the value zone, that's why I look at the ATR channel, the 1 and the -1, anywhere in here as the value zone. So thanks for that, Murat. Chris says, also looks like a gap on day 3 of the gold V2. All right, let's take a look. Yeah, 100%, Chris. This is a V2. Here's day 1, day 2, day 3, day 2 washes out day 1. But yes, it is a gap. Kerry Lavorne taught me these V1s, V2s. He allows for a 1 quarter gap. So here's from here to here is 1 ATR. From here to here is 1 ATR. So a quarter gap would be about this much, which would be allowed. This is more like a half or 5/8 ATR. So I wouldn't buy that either. But on the other side, we do have a fractal. But I didn't buy this again. It's just too high. But there's a couple different positive and negatives of what's going on here. But yeah, good point. I really like, Chris, that you pointed that out because there's nuances to V1s, V2s. The gaps, the slope of the price coming down before you have the V1, V2. And if you look at a chart, you can find a million V1s, V2s. You find them all day long, but not proper V1s. So it's the devil's in the details with these proper things, like not taking a V1 if it's, right close to the 1 ATR, not taking a V1 if you have a gap, not taking a V1 if you don't have any sidewards movement. Murat says, I played around with the Keltner channel today. Placed like you up to the third standard deviation. I like it, especially in a weekly graph, since it fits very much to my trading approach. Oh, perfect. Yeah, I mean, they should work on any time frame. Probably the higher the time frame, the better. But it's good that it's it's good that it's in sync with your trading approach too. It's important. Murat says, your V1, V2 approach seems to be very stable in weekly graph. My first test is the strong weekly graph. If I don't see strong weekly chart, I just pass. That's good. Yeah, it's good. Again, Murat, also, if you're trading on the weekly, look on the monthly chart above you. Look at the higher time frame above you to see what's going on there too. See if something looks decent or okay. If something looks horrible, like if you're trading on the weekly, but the monthly is up at the third ATR channel on the monthly, not so good. Steve Burns says, IYT transport's down big today. Let's take a look. Oh, goodness me. Well, there's a V2 to the downside. Day 1, day 2, day 3, day 2 washes out day 1. However, it did gap. So that's not a great V2. And I certainly wouldn't take this trade anyway, because now we're back into a 49 RSI. That's probably, if you wanted to go short, it's probably about right where I would want to cover my short. Wow, big day, 3.57%. Amazing. Steve Burns says, VIX back-to-back bullish engulfing candles. Yep, looks like it is putting in a bottom. So SPY could put in a short-term top. Interesting. We'll see. Yeah, we'll see. That was my thought too. Yesterday really is the first day that VIX kind of started to come alive, and then another big day today. Obviously yesterday would have been the better entry, but my rules are it has to fit, check this box, this box, this box, and it checked 2, but not 3. But I got 3 today, but I had to pay a higher price for it. Mount Doji, CSX adjusted guidance from positive to negative. Yeah. That doesn't help the transports. Andy says, IWM has vastly underperformed SPY. Big divergence. Was wondering if IWM backtests as well for the overnight trade. Andy, I don't know. I don't know if IWM backtests well on the overnight. My guess is that it would probably outperform the buying in the morning, selling in the afternoon. But I don't know that for certain. That's just a guess. But, if you take the view that a lot of things get bid up in the after hours in the pre-market, then that probably goes for the IWM as well. But unfortunately, I don't have an answer to that, bud. Mount Doji, doesn't the lower volume on VXX seem bearish? Well, we've had high volume here, Mount Doji, on the last 2 days. Take a look. See, here's my average, the blue line. Yesterday and today, the volume is above average, which I do look at like as positive. NVM. That doesn't look like I have an NVM. Or volume. Johnny says, I am watching for the Vanguard VONE and VTWO ETFs to form V1s, V2s. Yeah, well, they're coming back into the value zone. That's what's important. However, if we had a V1 tomorrow on this, Johnny, I couldn't take it because this bar, day 1, is larger than 1 ATR. And if it's larger than 1 ATR, it means there was a lot of selling that had to happen in order for that to happen. If there was a lot of selling, it's going to be tough to get back in there because people just sold there. So there's VTWO. Yeah, I mean, if we had a V1, if we had a V2 tomorrow without the gap, it'd be decent. It's still within the value zone, not too close. It'd be decent. Steve says the new book will be on Audible later. Oh, good. Awesome. I really like to listen to my books on Audible while I'm hiking. Holy crap. Netflix down 10.6% after earnings, guys. Steve just mentioned. Whoo, daddy. Whoo, daddy. 10.6%. Again, guys, this is an example to you of why not to gamble on earnings. 10.6%? Holy crap. Let's see where that would be. Close enough. All right. Well, that's what happens, everybody. You gamble on earnings. Can you imagine? You bought at 361. Now you're at 322. Unbelievable. Don't gamble through earnings, everybody. You do not want that to happen to you. You'd be better off to go to Las Vegas and at least get a free buffet. Oh. V1, V2. What? Wait a minute. Yeah, but ironically, Johnny, I typed in V1. How dare you? Good joke, though. But look, V1 is a symbol. And it is coming back into the value zone. V2. Oh, crap. Ah, screw it. I can't find it. Good joke. Good joke, Johnny. Touche, buddy. That was good. That was good. But for the record, V1 and V2 are symbols. Hey, I got a... Do you remember yesterday, guys, when William asked me where the 70 RSI was on eBay? And I told him it was at 4108. Look where Big Bad William sold his stock today when it hit 4108. Thank goodness, right? Look at that. Is that sweet? I'm really glad he asked because at least it gives you a reference point. Thanks, Dr. Jorgensen. I'll talk to you later, buddy. That was a sweet joke, no doubt. Totally got me, man. That was awesome. I appreciate that. I appreciate a good joke like that. But look at this. Thank God William got out of here at 4108. Nice job, William, but at least he had a reference point, right? And let's see. I know Mount Doji had Qualcomm. Bit of a red flag here to close so low below the open. I don't know Mount Doji. I mean, still you're up on the day technically. I don't know if you took any profit. I hope you did. There's a V3 called V3. We might be on to something. Dude, that was seriously the funniest thing ever. And I totally didn't know. I totally didn't realize it. I just saw symbols. That's awesome. That's awesome. So anyway, I don't know what Mount Doji did with that. And then Murat up today with his CLF, which is pretty sweet also. And then that LWAY trade that Shalin pointed out. He asked me if I would have bought that yesterday. I still would have bought that, no doubt about it, and did have a nice move up. I guess, the way I trade, I'd have 2 profit targets at the very least, but this would be a red flag to get back out of the trade, just to lock in what I had locked in up here. Okay. All right. So, does anyone have any other questions? If you do, this is final call. Otherwise, I'm going to get up into the mountains and go for a hike. Oh, Frederick, you sent me this chart and you asked what I thought about it. I mean, okay, we have a V2. Here's day 1, here's day 2. It washes out day 1, day 3 closes above day 1. It did gap up, which normally I wouldn't take, but you see how it gapped up and then came back down and tested the close and then went back up? That negates the gap. This makes it valid. So yes, it was a valid V2 here on this day, but what I don't like that it came straight down. It did hover for maybe 1 day. I guess it's okay, but not an A trade. It's like I told you, it's like a B trade. But if I did enter here, this is the washout bar, day 1, day 2. Day 2 washes out day 1. If I got to close below halfway of this washout bar, this day 2 washout bar, like if it closed here, I'd keep it. If it closed under there, I would get out, because 50% of any bar should have some inherent Fibonacci support at the 50%. So if it closes below that halfway, that's not a good sign. So I hope that helps, Frederick. Keep us up to date on what's going on with that trade. All right, everybody. Well, listen, thank you for coming by today. I hope this helped today. Keep sharing your trades with me. I'd love to see what you guys are doing and how you're managing them going forward. And so I will be around tomorrow, God willing, on Thursday during the last hour of the market. So if you're able to come by, please do. If you have some questions that you didn't get answered today, or you didn't have a question, please feel free to email them to me or Twitter them to me, and I'll do my best to answer. Frederick says washout bar is the full bar, right? The washout bar was day 2, Frederick. Let me see if I can find this again. If it's a V1, the washout bar is day 2. If it's a V3, if it's a V1, the washout bar is the current bar that triggers. If it's a V2, it's the 3rd day. So here's day 1, here's day 2, here's day 3. Day 2 washes out day 1. So whenever I say the bar washes out, that becomes the washout bar. I do like that it rejected the first ATR channel too. I didn't notice that the first time. So all in all, it's pretty good. I guess you did get a couple days of sidewards movement here, but the rejection of this first ATR channel is good. And I do like that it gapped up and came back, tested the close, and then headed back up. So does that answer your question, Frederick? Hey, you're welcome out, Doji. Good to see you, my friend. Hey, what'd you do with Qualcomm? All right, maybe Mount Doji took off. So anyway, Frederick, I hope that answered. Washed out is the full bar, right? I'm not sure what you mean by that, but this is the washout bar. Any bar that goes below the previous day and then goes back up, the washout bar halfway is a good place for your stops. All right, so Mount Doji, thank you, Frederick. Thank you, my friend Johnny, Dr. Jorgensen. Sold Qualcomm right at the open. Oh, sweet, buddy. God, I'm glad to hear that. I am glad to hear that. Beautiful, beautiful, my friend. And Dr. Jorgensen and JT, thank you so much for coming by. Steve Burns, it's always a pleasure and an honor to have you here. Thank you so much. Andy, good seeing you. Murray, really nice seeing you. Hope everything's well over in Norway. I think we got everybody, right? And Shallon, thank you. Good seeing you. Hope you come by again. JT and Andy. So, all right. Well, that's it, guys. Thanks for coming by. Hope to see you tomorrow during the last hour of the market, and we'll see what the market should be. An interesting day. Thanks, JT. You're welcome, buddy. Should be an interesting day tomorrow for sure. So be safe. Go out, do something nice for somebody today. All right. All right. Have a good one, everybody, and talk to you later. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.